Yeah. So I think with leverage, first of all, on a personal level, yourself as an investor, it's best to minimize or eliminate it. I mean, I think it's perfectly fine if you have a mortgage. It's perfectly fine if your cars have loans on them. In fact, I think it's a good idea for all your depreciating assets to be financed and your home to be financed. I think those are reasonable things to do. But I don't think you should have margin debt in a brokerage account, etc. I think that's not a good idea. And also not to play around much with options and derivatives on a personal level. So I think that's also not a good idea. But when you get past all that and you're looking at different businesses, I think it's pretty apparent whether a business is levered or not. I think that's pretty easy to tell on the balance sheet. Sometimes there are some liabilities which are off balance sheet, like leases, etc. But if you read the annual reports and such, I think it would become pretty obvious what their obligations are. The ideal great business is one that generates, very high returns on equity without any use of borrowed money or leverage. Like, we have a company in the US called Fair Isaacs. It's based in Berkeley. They're the ones who, have all the FICO scores. And so each time some financial institution gives you your FICO score, they get 1 penny or something. So it's a great business. And basically that business is very profitable. They don't really need any leverage, and they are a large portion of the revenue goes to the bottom line. But in investing, there are always, every situation has an exception, and they can be really good investments one can make in businesses which are levered. Sometimes the leverage can be non-recourse, or sometimes the terms can be such that the market is misreading it. It's causing distress on the equity for not very good reasons, and so on. So I think sometimes the presence of leverage can create great investment opportunities. But to keep it simple, if you just said to yourself, I would not invest in businesses which were levered, you could live a very blissful and profitable life.
Awesome. Kind of relating to that too, I know a lot of people are expecting rates to rise in the next few months or even years. Is that going to have any effect on how we look at leverage or the amount of leverage some companies take on now that these rates are rising, or how's that going to affect stock prices, do you think, going forward?
Yeah, I mean, if a business is levered and they are having difficulties, or the interest is a very significant part of their earnings at low interest rates, and that's a very serious concern, because you could easily get to a situation when they're upside down or they're tripping covenants and so on. So yeah, I think it's very important to look at the gearing ratios and how likely the business is to be able to withstand meaningful changes in interest rates. And in general, capitalism is brutal. Most businesses do not survive for more than a few decades, even the very successful ones. The ones that have leverage are going to be significantly less likely to be able to survive for multiple decades of time, because you're just adding a layer where you could have a very significant business downturn at the same time when rates go up, and you're kind of upside down, and then your lenders start to turn the screws on you. Those are not good situations to find yourself in.